Hello Shane, thanks very much for joining us. You've just released some customer commitments, a range of matters that are related to the Royal Commission, but actually a lot of the work you're talking about here predates the Royal Commission. Can you just explain how it all fits together, what you've committed to do with customers?
Sure. So we've just received the final report of the Royal Commission, and it came out with 76 recommendations. Of those, not all of them relate to banks in the sense of ANZ, but about 50 of them do. Some of them require legislative change and the law needs to change, and some of them we just sat down and said, you know what, some of these we've either already done and we should just commit to and tell people we've done them and we're going to kind of enshrine in our own policies, and some of them we're going to do. So we said we're not going to wait. So we sat down and we decided we would make those commitments. And there's a range of things there. Some of them are around how we treat customers, some of them are around product suitability, some of them are around executive accountability. But they're an important thing to say, hey, at ANZ, we're not waiting on this. We hear the need for change from the community and the Royal Commission. We're going to get on with what we can. Now, I think it's important to say this is not the end. This is just a very early step. To your point, some of them really build on things we'd already done in the past, but we thought it was important to kind of commit to the next stage of development.
Also a document released this week with the glorious title of the APS 330. And what it is, it's a sort of risk update, a technical document. But in that document, you repeated some comments which you made back at the full year result around investor lending on residential property. In essence, the bank had perhaps tightened things too hard, been too conservative, I think was the wording, and you're looking back at that. Can you explain what that means? Does that mean more aggressive lending? Or?
So it's called a Pillar 3, this APS 330. It's a document that all the banks are required to publish. It's about transparency around our risk data, if you will, the quality of our balance sheet, our losses, what's happening, delinquencies, loan growth, those sorts of things. So it's not about profit and loss statement like a trading update. But we took the opportunity because if you look into the data, there's clearly been quite a significant change, and that's right across the industry. There's been a slowdown in home lending. We can see that, we read about it in the newspapers. It's different state by state. It's certainly different between people who are buying to own and occupy a home versus invest in a property. And so we wanted to give some flavour to that. So in addition to just the data we were required, we gave some commentary, and basically what we said, which was, to your point, was a repeat of what we said at our full year results. What we've seen is quite a big shift in the marketplace. As a strategic choice, ANZ, we've decided for some time now that we prefer, not exclusively, but we prefer to be in the owner-occupier space. We think it's an area where we can add value to customers, we think it's lower risk, and we think it's something we can do really, really well. We still want to be an investor, but it's not our primary aim. What we did in implementing that, and we've also seen a shift in just what consumers and customers want to do, we probably were too conservative, and what happened is we really saw a lot of investors get rejected by ANZ that probably shouldn't have, and that's what we were saying. It's not a case of us saying we're suddenly changing strategy. We still prefer owner-occupiers. We think it's the right place to be, but we accept that we went too hard on and became too conservative in assessing investors.
And how would you expect to see that play out? Would you expect a sort of gradual uptick, or would you expect something dramatic in approvals?
Well, that's a really good question. So these are super tanker businesses, and thankfully we don't want to see sharp changes day to day. And the way that we make these shifts is by changing our policy and processes. So we've gone back and looked at policies and said, we were probably a little bit tough on this, or we weren't really tolerant of exceptional cases over here, or we made this process just too difficult for some of our customers. So we've made those policy changes already. There'll still be some more, but those things will see a gradual increase in our share, if you will, of the market. So I would imagine that over the balance of the year, you'll see a gradual rise in our share of that business, whatever that volume might be.
And just finally on that document, there was also some broader thoughts on how the market is travelling in terms of credit quality out there, and also the bank's capital position. Can you give us a little bit more on that?
Yeah, so our strategy at ANZ around simplification, doing a few things, doing them well, is working. We've got a really strong capital position, in fact the strongest of our peer group, and we've still got some more capital that's owed to us from some asset sales that will be completed in the coming months, so that's really good. But what we really were talking about was business conditions, because there's a lot of interest in that. You know, people are worried about house prices and what's happening there. There's some concern in the business community. If I was to just, read the newspaper and look at the recent earnings announcements, there's been a lot more negative surprises from all sorts of industries than we've been used to. So we just wanted to put a tone of caution out there. It's not a red flag. We're not saying anything terrible is going to happen, just saying it's a time to be a little bit cautious. We've got an election. So there's a lot going on, and we really wanted to alert our investors to say this is a time of a little bit of uncertainty. We think volumes and growth is going to be a little bit low. It's time to be prudent. It's time to be cautious and careful, and just kind of see what's happening in the coming months.
Well, thanks very much for your time again today, Shayne.
Thank you.